The following is brought to you by goldseekmint.com. Silver and gold bullion directly from the mint. goldseekmint.com.
Welcome to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Vancouver. I'm here with Peter Spina, President and CEO of GoldSeek and SilverSeek.com. Welcome, Peter. Great to have you here with us.
It's great to be back.
Peter, silver has lagged behind gold. Why do you think that is?
Well, during this pullback in the gold market and silver market, silver has fallen a lot faster and further than the gold price has. And that's a kind of a traditional attribute of silver. When the price of silver is a lot more volatile versus gold, so on the way down it'll fall faster and deeper than gold, but on the reverse side, when the price of gold starts rallying, silver will most definitely outperform.
So what do you see happening in silver this year?
Well, we're at a point right now with around $18 to $19 silver, where your downside risks are maybe a couple dollars an ounce, and your upside reward is significant, many times more than that. So I see silver kind of finishing off this consolidation period. Technically, if you look back for the last couple of years, we've had this really strong downtrend, and now the gap between the support and the downtrend is getting to the point where we'll probably see a pretty big move. It's kind of hard. It could be kind of a flip of a coin situation where it'll break down maybe a couple dollars and be the final washout, or we could kind of have a surprise and a big rally in silver back to the mid-20s. So I kind of see silver stuck in a range until it can make this move in the coming probably next month or two.
So you're saying technically silver looks like it could actually break out quite a bit?
It could have actually a pretty surprising move to the upside. And with a lot of concentrated short positions in the market, it could be a really big and a quick short covering rally, which could take the price to the mid to upper 20s.
So what are you seeing with industrial demand?
It's staying pretty, it still remains strong. Investor demand is also pretty strong out there. But we'll have to see what happens with the economies globally. There has been a slowdown in China. Does that mean we'll start to see a slack in industrial demand? But with that, we should probably see an increase in investor demand to make up for any slack.
And moving over to gold. Gold is held in a fairly steady range. Why do you think that is?
Well, we had a very large pullback, and for the last months, it's been quite stable. Recently, it's kind of broken this $1,285, $1,300 range it's been in. It's kind of fallen from that. But fundamentally, the amount of gold buying coming from Asia has sustained these prices quite well, as a Western investor has kind of finished liquidating their positions. So it's kind of trying to finish off this consolidation phase, and it may not be done quite yet, but I think we're in the last stages of this consolidation.
And looking at India, they had some severe import restrictions. Now that they've got this new ruling majority in place, how much do you think lifting those import restrictions could actually affect gold?
Right, that's a big move, change in the gold market. I think we're looking at maybe in July, sometime this year, where we'll start to see either some easing or a lifting of these import restrictions, and that'll really kick some more demand into gold. So that is going to be a big factor in the gold market going forward for the second half of this year. And with China continuing to buy incredible amounts of gold, those two, number one and number two gold buyers back in full force in the market, could have a very positive effect on the gold price.
And Russia just recently bought over $1 billion worth of gold. Why did they purchase such a large amount?
Well, Russia continues to add to their gold holdings. This isn't nothing new. They've been in a steady trend, but this last month was a lot larger. What happened was Russia has been liquidating their treasury bonds. There's a lot of other things going on between Russia, China, and the dollar, but they are looking into increasing their gold assets along with China as they look to have a stronger currency and one that has better reputation that they can now compete more with the US dollar. And gold is a very instrumental part of this. They need that to bring trust and integrity to their currency. So this is a trend that I believe will continue to go on, and Russia is a big buyer of gold and will continue to be so.
Now, what's your overall assessment of the US economy right now?
Well, it's doing quite well. It's kind of growing a little bit. Well, last quarter not so much, but this current quarter, the expectations are for some strong growth as inventory, as things have worked through, and other parts that have kind of created a weak first quarter GDP. But things are okay at the moment, but there's a lot of things that can trigger things to change. So I think for the next half year, the economy will continue to kind of push along and struggle. But when you consider all the money that's been printed and created and put into the system to get this economy going, it's pretty dismal that this is the only result we have from all these trillions of dollars, the 3 or 4 trillion that's been created. So what's going to happen now with the tapering? With that falling off the table, well, how is the economy going to respond to that? How will the stock market respond to that? So these are questions I think that are going to start to come into play. And I think as we get into next year or two, things are going to start to change, and there's going to be some there'll be some pressures on the U.S. economy. I think we'll start to see more of a stagflationary environment.
Now, talking about the taper, what do you see happening there?
Well, we've had this taper, officially a taper from the Federal Reserve, but we're not actually seeing a true taper. We had a very interesting situation coming through Belgium. We've had an incredible amount of bond purchases coming through Belgium, but not Belgium specifically, an entity that's been registered and is operating within Belgium. There's various theories on who that might be. One of the kind of top two things are that it's the ECB actually who's buying bonds. So if that's the case, there really hasn't been a true tapering. The effects of the tapering hasn't been felt. There's another theory that this is part of the BRICS nations looking to establish an alternative to the current World Bank and IMF to compete with them, and this might be part of the establishment of the BRICS central banking system, which is another big contender and a competitor to the US dollar's dominance.
Now, how much is the crisis in the Ukraine affecting the gold price?
I think that people, especially in the Western media, haven't been portraying the situation in Ukraine properly, and the Western investor really doesn't understand the risks that this brings to the financial markets and to the global economy. And really, in the end, this is a threat to the US dollar, because what's happening in Ukraine is you've got two superpowers, Russia and the West, vying for some very valuable land, some very valuable resources, and really trying to dominate. And I think what the West is trying to do is to threaten Russia's power in the region. So Russia is responding in a way that you would expect the U.S. to respond if they were in the same situation, which is to protect their interest. So you have a situation, I think, that's going to really start to become more and more of a problem going forward, especially in the summer. And I don't think many investors in the gold market they've been discounting the situation. So
it's a lack of understanding.
Yes, and I think that will change as this problem continues to get worse, and this belief that things have been resolved and are okay, that is not the case. I mean, we're almost entering, if not into a civil war situation right now.
Just to close things up, what has surprised you the most so far this year?
I believe that the fundamental case for gold and silver has been increasing dramatically. And the fact that the Western investor has yet to react to that the complacency levels remain where they're at, considering all the global things that are happening right now, especially the threat to the US dollar's dominance. With Russia and China just signed a huge energy agreement, $400 billion. That was, I think, sped up because of the situation in Ukraine, that they're seeing that we need to really push forward these other alternatives to compete with the dollar. So to me, I think it's amazing that has not yet developed. The Western investor hasn't seen what's really coming ahead of us, that the US dollar is starting to lose its dominance, and that gold is becoming a very major player in the international financial monetary system, and that China and Russia are really going to be using gold to help float their currencies.
It's very interesting. Well, Peter, thank you so much for joining us. It was a pleasure having you back here with us again.
Thank you.